This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 22nd of May in London. I'm Stephen Carroll.
And I'm Lizzie Burden. Coming up today, UK inflation cools less than expected, with sticky services costs damaging hopes for rapid rate cuts.
One man dies and dozens of people remain in hospital in Thailand following severe turbulence on a flight from London to Singapore.
Plus, Wall Street bets on blowout quarterly results from AI leader Nvidia later today. We'll dig into what to expect next.
Let's start with a roundup of our top stories.
UK inflation has fallen to 2.3%. Economists surveyed by Bloomberg had expected headline annual CPI to slow to 2.1% in April, down from 3.2% in March.
The core CPI number rising also coming in higher than expected, a slowdown from March. 3.9% is the figure for core CPI in the UK, and in the immediate aftermath of those figures being published, we have seen the pound strengthen on cable, up 0.3% of 1% to 127.42 against the dollar. Meanwhile, the European Central Bank President Christine Lagarde has hinted there's a strong likelihood of an interest rate cut at its next meeting in 2 weeks' time. Here's what she told the Irish broadcaster RTE.
No predicament, no prescription, no commitment, but it is a case that if the data that we receive reinforce the confidence level that we have, that we will deliver 2% inflation in the medium term, which is our objective, our mission, our duty, then there is a strong likelihood.
Christine Lagarde speaking there on RTE's primetime programme. ECB Governing Council members are starting to differ on the rate path beyond the first cut. Bundesbank President Joachim Nagel said yesterday uncertainty is still high and they should not cut rates hastily.
Two Fed officials are saying that the US needs to think about interest rates staying higher for longer. The comments from Loretta Mester and Susan Collins reinforce the gap opening up between central banks in the US and in Europe. Mester, who heads up the Cleveland Fed, said months more data are needed.
It's too soon to tell what path inflation's on, so we just need to collect more information on that. You know, last year people were worried about, the Fed may be getting too restrictive and therefore it's going to dampen the economy. Those risks went down. At the same time, the risks to inflation, I think, are tilted to the upside and remain so. And so that's the balancing that we have to do as we set policy going forward.
Mester's comments calling for more time and data have been echoed in recent days by other FOMC members. Swaps markets are now pricing in around 40 basis points of rate cuts by the end of the year, and bond traders digest the central bank's caution.
One passenger has died after a Singapore Airlines aircraft suffered a sudden high-altitude turbulence on a flight from London. A 73-year-old man is expected to have suffered a heart attack. Several others have been seriously injured. Paul Williams, a professor of atmospheric science, says turbulence like this is unusual.
If you're flying through severe turbulence, gravity can't pin you to your seat. The plane can be moving down more rapidly than gravity can keep you pinned to your seat. So if you're not seatbelted, you will start to lift up. And sadly, that is what appears to have happened. So it's quite rare in the atmosphere.
Paul Williams speaking there. The Civil Aviation Authority of Thailand is investigating the cause of the incident. Singapore Airlines has a robust safety record, consistently ranking among the world's safest.
A British man charged with spying for a foreign intelligence service from Hong Kong has died for what's been described as unexplained reasons. 37-year-old Matthew Trickett was found dead in a park in Maidenhead, west of London, on Sunday, just days before he'd been charged under the National Security Act last week and was on bail pending a court hearing. Police are appealing for witnesses to contact them.
Stricter financial regulation in the United States is prompting Barclays to consider a return to the office for some employees. Some managers have even started warning their staff to prepare for a return to the daily commute. Bloomberg's Tiwa Adebayo has the details.
The pandemic brought with it widespread changes to working culture, and for many in the city that meant an end to the 5-day office work week. But new rules from the Financial Industry Regulatory Authority could be set to disrupt working culture once again. Barclays, who declined to comment on the news, is among firms considering whether to mandate office attendance after US brokerage regulators announced new requirements for keeping tabs on workers. Bloomberg understands that the guidelines, due to take effect in a matter of weeks, may only affect operations overseen by the regulator. Amongst the incoming regulation will be a mandate for brokerages to list some home offices in their records, which will become subject to inspection. Many firms still plan to allow remote working on a part-time basis. In London, Tiwa Adebayo, Bloomberg Radio.
Now in a moment we'll dig more detail into that latest UK inflation data. But another story that caught my eye this morning is why Monaco might have to pay more to keep hosting its iconic Grand Prix. Our colleagues Thomas Buckley and Hannah Elliott have been writing about this ahead of this weekend's race. Now Monaco pays around $20 million every year to Liberty Media, which owns Formula One, to host the race. That's actually the lowest of any race on the calendar. Saudi Arabia and Bahrain, for example, pay more than $50 million. Now Monaco's contract with F1 expires next year, and Bloomberg has learned that Liberty wants the price to increase. A spokesperson for Formula One declined to comment on the current talks, but said the company's not considering pulling out of Monaco, and the Automobile Club of Monaco, which organises the race, didn't respond to our requests for comment. But organisers speaking have been unwilling to change the business model all that much, because according to one person speaking to Bloomberg, they're confident the history and prestige of the race, which has been nearly 100 years old now on the circuit in Monaco, trumps financial considerations. A lot of Formula One drivers also live in Monaco, although Lewis Hamilton has complained that it's the most boring race he's ever participated in. So an interesting one to watch there, and more to read on Bloomberg.com and on the terminal. Well, let's turn back to our lead story this morning and the latest inflation data out here in the UK. Cooling, but not by as much as had been expected. Lizzie, we're lucky to have you with us with your UK correspondent hat on this morning. What should we be paying attention to in the figures that we've just had out?
So you've got beats on the headline, core and services levels. Even if inflation is moving in the right direction, it's still sticky here in the UK. So at the headline level, 2.3% is what it's come in as for April year on year. The expectation was 2.1%. It's come down from 3.2%. In the Bloomberg survey, only one bank expected this. It was the highest forecast submitted. Then if you go under the bonnet to the core level, you've got a 3.9 reading. The survey was 3.6, even though it's come down from 4.2%. And services, what the Bank of England is really focused on, is a lot higher than expected, 5.9%. And that might be a real worry for Threadneedle Street. It is barely a budge from the 6% that it was in March. So before this print, there was a lot of talk about how it was all going to confirm that we'll have a June cut from the Bank of England. But if you look at the reaction in sterling, 0.3% higher, $1.27 is where we're at. That's a hawkish reading. And so we'll wait for the Bank of England bets to open at 7:30 a.m. But before this set of numbers, it was a coin toss on the June cut. It'll be interesting to see whether traders have paired their bets at all.
Yeah, very interesting to consider the detail of this, as well as across the street from us here in Threadneedle Street, they will be combing very carefully through this too. Where does this lead the Bank of England and the likely rate cutting path? Well,
it's interesting. I'm just looking at the statement from the Prime Minister, Rishi Sunak, saying that today marks a major moment for the economy with inflation back to normal. This is proof that the plan is working, that the difficult decisions we have taken are paying off. Brighter days are ahead, but only if we stick to the plan. So actually, he's kind of embracing this as getting back to target. So the fact that we're just 2 percentage points, 0.2% off the target, the survey for the target, is still being embraced, because it is a tremendous drop from 3.2 to 2.3%. But of course, the Prime Minister would welcome this, because it was his top priority last year to halve inflation. And this year, it's still a focus on relieving this cost of living crisis. Will the Bank of England read it in the same way? Will the market read it in the same way later when we get those BOE bets?
Yeah, I mean, look, this is an interesting one because, as you say, the inflation is coming down. It's just not down as much as we had been expected. So it's an interesting one to see the differing reactions that we're going to get from the markets, and also how politicians are painting it as well. this is sort of an interesting moment to be keeping an eye on where this trajectory goes, because we're waiting for action from the Bank of England to see what it does in the rate path. But also, of course, we're looking ahead towards an election.
Yeah, and I would note that when we heard from Andrew Bailey yesterday, he was speaking at the London School of Economics, he was not as clear as Christine Lagarde, saying that a June cut is likely. He was expecting quite a drop, you heard him there, and that the next move in rates will be a cut. But he was not saying that that cut would come in June or August specifically. So hedging his bets essentially on when the cut is coming, I'm sure that they'll be looking at these particularly sticky services and core readings and waiting for the rest of the data that we're going to get.
Yeah, interesting to see some of the commentary coming out of the Office for National Statistics on the stickiness in this inflation. The chief economist at the ONS talking about the prices of goods leaving factories rising a little over the last year, while the price of raw materials and fuels grew in the last month. Although, as Grant Fitzner points out, they still remain below where they were a year ago. So the detail in this, Lizzie, very interesting as well. And that services number, you made reference to it already, coming in very close to where it was last month. Really not much of a movement at all. And that's of particular importance.
Yeah, you might not expect the outspokenness from the chief economist of the ONS, but Grant Fitzner has been speaking out recently, and he points out here that services companies such as in hospitality are particularly exposed to wage costs. Hence, it has been such a sticky number here, barely budging, as I say, 5.9%, only down from 6% there.
Yeah, OK. Well, we'll be watching, of course, closely for further market reaction to that story too. I just want to bring you up to date with another breaking news story we've had out in the UK this morning, and this is of two fines coming from UK regulators for Citigroup. The Financial Conduct Authority fining Citigroup's global markets £27.8 million for failures in its trading systems and controls. The Prudential Regulation Authority also fining Citigroup for the same reasons, just under £34 million. So a total fine, in fact, for the bank of just under £62 million for what's being described as these failures in trading systems and controls. That is some breaking news we're getting around Citigroup this morning.
Now, I think it's fair to say, Stephen, that today is the most exciting day for the market of the week. The other thing that's on the agenda, of course, are the Nvidia earnings. The AI leader set to report its results after the Wall Street close today, capping off reports from America's big tech giants. Nvidia shares have been inching ever higher this month, within a whisper of its all-time high from March. And we can get a preview now of those earnings with Matt Bloxham from Bloomberg Intelligence. Matt, what are you looking out for in these results today?
Yeah, well, I think the big focus is going to be on revenue, not just for the quarter they're going to report. So that was the quarter that ended at the end of April, but also the forward quarter. So for the quarter they're going to report, the market's looking for about $24.7 billion, which is a little bit ahead of the $24 billion guidance they set at their last set of results. And then if you look forward to the next quarter, that's where, the market's looking for the guidance they're going to give. The consensus is around $26.8 billion. So I think looking for a number, let's say around $27 billion for that forward guide, that's really where the market's going to be. There's obviously big questions about how long can Nvidia continue to grow at this incredibly fast pace. Is there going to start to be some kind of headwinds from competition, or, as we saw earlier in the week, some clients may be holding back on the current technology of chips and pushing their demand and their orders into the new technology of chips? So that's kind of really where the big focus is going to lie, I think.
How much competition is Nvidia facing from others? We know that the demand is pretty insatiable in this area. Are there others who are stepping up to the plate? Yeah,
there are, although, it's kind of a slow burn. So all of their big customers, so the so-called hyperscalers, people like Google and Amazon and Meta and Microsoft, because they're so reliant on Nvidia, they've been developing their own chips so they can do some of this processing themselves. But it's a relatively early stage, and they're still doing that in parallel with buying kit from Nvidia. And then you've got some of the more traditional chip manufacturers like AMD who are saying, wow, this is an enormous market. We must be able to reconfigure some of what we do already to tap into this demand. So I think that stuff's all coming, but it doesn't just happen overnight. So I think if you kind of look a year out from now, there'll be a lot more competition for Nvidia to kind of fight against. But I think by then the market's going to be even bigger. And obviously the market's evolving. We heard earlier in the week that Dell's launched a new range of PCs that are kind of AI focused. So there's a lot of different moving parts in how the overall chip and technology industry is shifting.
Just thinking about the reaction that we can expect after these results, I feel like good isn't good enough for investors in this space. I was looking at the shares in Advanced Micro Devices. They fell nearly 10%, even though it raised its sales forecast. And then you had Supermicro Computer falling 14%, even though their forecasts went above and beyond estimates. So even if Nvidia does well today, will good be good enough for investors?
I mean, it's a really good question, and I think the sense would be possibly not, because the markets can be so fickle, and whilst the market's looking for a significant increase in the forward quarter, I think in the back of people's minds thinking, they're easily going to post something better than this, because the last 3 or 4 quarters they've always come up with guidance that's been way better than the market's expected. But every quarter that goes by, the market starts to anticipate that more and more. So you need a really big beat for people to kind of be pleased and positively surprised by the numbers, and that as the stock's at close to an all-time high, there's a lot of growth already factored into that share price.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.